This is the Stockwell Roche Show, giving you real-time information you need to make educated decisions about buying and selling in the world-renowned Twin Cities. Now your hosts and real estate experts, Jason Stockwell and Josh Roche.
Good morning, Minneapolis, St. Paul. Jason Stockwell with RE/MAX Results.
Josh Roche, RE/MAX Advantage Plus.
We have a great show. We have Jason Light with Envoy Mortgage. We have John Zeman with Vanquish AP. How you guys doing?
Oh, outstanding. Got an extra hour of sleep last night. Feeling dandy.
Awesome. We love it. Yeah, that's right. Roll back. So we're talking about a lot of stuff today.
They're all on me.
So we're talking about a lot of stuff today, but condo comeback is one of our topics. We're going to be talking about that in the third segment. Condos are coming back. Condo comeback. In the second segment, apartments and leasing them, and just the sheer mass apartment influx that's going on right now is mind-blowing, and it's amazing that they're getting leased and they're happening. And in the first segment here, we're going to be talking with John Zeman a lot about rent for profit. Or you could say hire or rent for hire, I guess, too, because that's what they do as property management. So, but first off, market update. Some quick news that Jason and Josh are going to be talking about, but I want to lead it off with one quick thing from Elliot Eisenberg, Graphs and Laughs. So he said this was earlier this week. Unsurprisingly, earlier today, he sent this out a couple days ago, but it says the Fed kept interest rates unchanged. In the press release following the meeting, the Fed found yet another way to say absolutely nothing about their future intentions, allowing the release to become a test for market participants. In this way, the possibility of a rate hike in December remains alive and forces markets to price in the possibility of a December rate hike if conditions warrant. So they're being tricky again. They didn't raise it, but they didn't give any inkling or any idea of what's going to happen. And Jason, we were just talking before the show, Jason Light with Envoy Mortgage. What happened to rates because of that?
Well,
or rates, not maybe because of that, but maybe because of that.
What we've seen is rates went down a little bit, but then they went back up. And some interesting stats, I think that would back that up. The GDP announced that they had estimates of a 1.5% increase. The 4-week average jobless claims is the lowest since 1973, and home sales have increased. When you look at the time frame of July to September, that was the first consistent increase prior to the last 7. So in other words, that was the first time in 7 quarterly estimates. So, and we're seeing a lot of home buyers that are under the age of 35 and the first-time homebuyers are depending less and less on gift money. They're actually utilizing their own checking and savings and funds from themselves. So things are just strengthening overall.
Yeah, free money, baby. Everybody's giving up free money. I'm just seeing it happening.
Secondary market's coming back.
I'm seeing all this happening, and I'm just like, I'm getting nervous about some stuff because it just seems like stuff is starting to flow a little bit too much.
Right.
But it's not flowing to everybody, and maybe that's another show. But it's flowing to people that are in business, that know what they're doing, they're in there and working, but everybody else isn't getting the money like they used to in the past. So maybe that's why. Maybe they're only hedging their risk on certain people. But man, people are buying and spending money like crazy, it seems like right now.
Well, apparently 35-year-olds and under are having the ability to save. I mean, to me, that was a crazy stat.
That's good. We can probably talk about health insurance on another show because I'm seeing on Facebook
I'm not going there.
Yeah, a lot of my friends that are either small business owners or self-employed and have kids like we do, and they're just absolutely skyrocketing.
It's ridiculous.
I just got hammered a week ago on that.
It's $10,000 a month or $10,000 deductibles, meaning you pay out of pocket $10,000 before the insurance even kicks in. And we're talking $1,500 a month,
Yep.
$1,600. We're talking mortgage payments, Jason. Right? That's a mortgage payment.
$1,300 a month for me.
That's a mortgage payment.
That is a mortgage payment.
Yes.
Payment, right?
A 15-year mortgage payment.
You got to be. I mean,
and they don't cover anything.
That I think is going to have a major, or probably could have a major impact on affordability. Because if you factor that in to your formula for approving people for loans, That's worse than a student loan. I mean, that's higher than student loans. It's higher than all kinds
But
of
do
stuff.
you?
We do not. However, it is
do not.
it
Yeah,
is
they don't.
completely affecting
It's not
their
on the-
disposable
It's not on the
income.
credit report, so it doesn't show up as a.
But it's impacting their financial situation.
Yeah, wow.
No doubt.
We're going to go into a show about that for sure, and there'll be a lot of people that
I probably will be a little upset if I'm on that show.
Yeah, well, hopefully it'll spur something to happen where it gets so there's some fix to some of it.
Changes take place, right?
Josh, sorry, what's happening in residential?
Residential,
Real estate sales.
it's starting to get cold out. We saw first snow actually happen the other day, and we're starting to see it in the numbers too. Right now, we're seeing pending sales. Pending sales are the only thing that's increased in the last week.
Really?
We're up 1.7% in pending sales, but now we're down. We're negative 7.2% in new listings, and our change in inventory is down 15.1%.
Yeah.
So what we're seeing is
It's still good. It still looks like good stats, but
Right.
but people are not going on the market. They're waiting. And I've talked to sellers a
Yep.
lot this last few weeks. They're waiting until next year. And buyers are actually being a little more selective. Very typical this time of year. It'll happen probably through the remainder of the year.
you look at the change in inventory. There's not much for them to look at really right now.
Yeah.
I mean, and if they are looking at it, they're getting multiple offers on the.
And I think maybe buyers are doing the same thing. They're kind of planning, but they're not moving or buying unless they have to or have a
Right.
compelling reason. And they're also going to wait again until spring. So I think next spring, should be really good. But
So this is normal.
yeah, normal cycle through this through the winter time. This happens. But if you still do want to sell or need to sell or have a compelling reason to sell, it's still a time to
Yep.
sell.
Yep.
Overall, if you go back 8 years, especially, or you go back between now and the last 8 years, it's really, really good to sell and buy. Obviously, it's still a good time to buy. If you can buy now and tough it out and move in the winter.
Well, buy now
it's a
because
good
look at the
time.
rates. The rates are still low. You still
Yep.
have the low down payment assistance program.
And who knows what's going to happen in December?
I think they're going to go up in December.
You think they're going to?
I'm going to say that.
I don't think they'll go up until after the presidential election. That's my opinion.
John Zeman says
John
after.
Zeman.
So you're going out a whole year. You're going to bank a whole year on that.
Maybe they'll go up a little bit, but I really don't think they'll do anything drastic.
I don't
with the
think they will in
upcoming
December either.
presidential election.
I can't imagine they would in December, but maybe they will. But in December, that's a holiday time. That's people are going to be spending money.
That's what people will need to refinance.
If rates
to pay
go
off some of
up,
the debt.
that could maybe curb a lot of people's spending. Might be nervous. I don't know. Who knows? But anyway,
They keep saying it, but I've been wrong every time.
it's over our heads.
every
So we're talking today. We have John Zeman. We're very fortunate to have John Zeman, owner, co-founder, Vanquish AP, which is a property management company. And we've met John probably a year ago now.
Getting close.
Yeah, close to a year ago. And how are things going? Tell us what you do, what your business does, and how have things been going for you?
Sure. Yeah, we're Vanquish AP, and what we did is we built our own proprietary software that automates about 90% of apartment building operations and rental property operations. So, time the tenant applies, showings, to the time they move out. Basically, everything in between. You're talking about notices, all the accounting, late fees, evictions, you name it. It's basically
there.
automated now through our company. So we can offer a lot better pricing than our competitors because our software does a lot of the legwork for
Right.
us.
Yep.
So we don't have nearly as many people on staff as normal managers.
Yeah.
typically do.
So Vanquish AP, VANQUISH AP.
Are you looking at his hat?
I'm looking at his golf hat there. Yeah.
I made sure that this branding was pretty big.
It's a unique name, Vanquish AP, but it's very cool. So I'm a customer or client actually of Vanquish AP, and I have a handful of rental properties, and I was managing them myself, and it was getting to be a headache. And even though you don't know me, or you may know me if you're listening out there, but I'm a pretty nice guy. Some people may not think I am, but I'm a pretty nice guy, and I'm pretty lenient. So if someone says, "Oh, I'm late on this," or I only want, I want to pay this amount or X, whatever the reason is, I'm understanding, and I'll give a lot of grace and a lot of time, probably too much time, and it was costing me, and it was also affecting my own well-being, so to speak. I was being just nervous and anxiety ridden and all this stuff, So I just said, hey, I'm going to be hands out of this. We met John, had him on the show. I said, hey, can you take over mine and see how it goes? And it's been almost a year. It's been awesome. The tenants will actually call me, and they get texts on
From
if
the
they're
software?
late from them automatically. I mean, so in the beginning, it was a transition because they're like, Jason, I get this text, and what's going on? I said, hey, I'm not handling it anymore. You have to pay. You know what I mean? You can't be waiting anymore, and I'm not going to give you the whole extra month and wait till next, and all that. So it's been really, really good. So
Awesome. Yeah. So we handle all that. Business has been really good. We've grown about 1,000% in 8 months.
Wow.
Something
That's
like
strong.
that.
That's super strong.
So I'm not complaining about that part, but it's been extremely busy, obviously, and everything like that. So, we handle it all. It's full service for you. So if you have a condo we handle 50, 60 unit properties now. Anything in between, we can handle. It's very, very easy. It's one signature, and it takes us 2 days to get the property up on our software, and all the tenants notified, them on ACH, auto transaction for checking and all that good stuff, and
Awesome.
it basically runs by itself then. So
that's what I was going to ask you. Is there a niche that you're going? I mean, obviously rental properties, right? But
Yep.
one unit or one house or all the way up, or do you? Or can
yeah,
you,
bigger is better for us because our software gets utilized more. We collect about 2,500 different data points at any given time on your property. So that's, any sort of maintenance submission coming in, who submits them, why they submit them, all this sorts of data that we kind of collect and we figure out, and we kind of break it all down and we figure out trends within your property. Obviously, there's not a lot of trends with one condo, but there are trends that happen when you got 200 people living in one building. So that stuff we kind of like to break down, and we adjust rents. We do all that to make your building more profitable.
that's what I was going to talk about.
So,
So,
yep.
so thanks, John. That's a good intro, and a great company, and they work in the Twin Cities here, and they're personally, I would recommend them because they take a lot off your plate and a lot off your nightly worries or daily worries or monthly worries or whatever you want to talk about. They handle it. They collect. The money gets put into your account. It's all online. You can see it, where it is, how much, and all that stuff. So it's really, really cool.
Yeah, right. I'll just real quick then. Yeah, so everything that we do is all tracked, and you can view it all right from your smartphone or tablet, computer, doesn't matter. You can log on anytime. You can see all your pending maintenance, when it's completed, how long it takes us to complete stuff, everything. It's right there for you to see.
nice.
So
Who's paid, who hasn't paid.
who hasn't paid? Yep.
The
exactly.
late fees on there too, and all that. You see all that stuff, and then they actually do a total if you have more than one property, or if you have a condo building, or apartment building. They have all of it in there, and it's all with copies of leases, copies of updates, all that stuff. It's all in one place. It's awesome, and it's really, really turnkey. And that's what we'll talk about in the next segment is a little bit about the apartments and the booming apartment, but then also rent for profit, how you become more profitable with a management company, and if buying rental property is for you, basically, if it's for you or for your loved one. So I'm Jason Stockwell with Remax Results.
Josh Roche, Remax Advantage Plus.
We'll be back soon. We have Jason Light and John Zeman.
I'm not